Welcome back, everyone. I hope you're having a great day as always. And in this episode, we have to discuss Ark Invest and take a look at their top 3 ETFs on the market. So Ark Invest has been one of the top asset management firms over the past 5 years, grossly outperforming the market. Their unique investing strategy of picking very young companies who have a ton of potential growth has paid off really well over the past few years. But recently, with the major pullback in the tech sector and all the companies who are losing money every year, trading at ridiculously high PEs that ran up by 100 or 200% in 2020, have all seen a major pullback, and that's primarily a big portion of Ark funds. So as of late, all of Ark's Flagship ETF have taken huge declines and have fallen by 20, 30, or 40%. And the journal is actually discussing this major pullback and the ability for Ark to actually rebound from this drop and continue to beat the market over the long term. So in this episode, we're going to take a look at 3 of Ark's ETF that I believe provide the best opportunity for long-term capital appreciation for many years to come. Although they are on a major hiccup right now, this dip may create a great buying opportunity as you can buy the same Ark ETF for 30 to 40% cheaper of where it was just a few weeks ago. So in this episode, we're going to go over the 3 ETFs, take a look at their investment philosophy, the stocks they hold, the recent performance, and my expectation for the fund's future growth going forward. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and of course today, we're going to focus on Ark Invest, who is led by their CEO, Catherine Wood. She is an incredibly intelligent woman with a lot of experience in the capital markets, and she has done a fantastic job of leading Ark to being one of the top asset managers in the world right now. And we can see Catherine Wood believes that Ark can identify large-scale investment opportunities in the public markets resulting from technological innovations centered around a specific few themes that will allow her funds to outperform the greater market. And she focuses on DNA sequencing, robotics, AI, energy storage, blockchain, and many more. So essentially, Ark's whole focus is to invest on disruptive innovation in the companies who plan to change the world. So for any companies, even if they're not profitable yet, even if they're very early on, if they have the potential to change the way humans live their daily lives, Ark will definitely be taking a look at them. And currently, this company has 8 different products on the market, 6 different Ark-based actively managed innovation ETFs, and they have 3 index-based ETFs as well. So in this video, I went through all 8 funds, read their fact sheet, determined which 3 I believe will perform the best going forward, and I chose those 3 to discuss in this episode. So for each ETF, we're going to take a look at its recent performance, the future expected growth rate, and the overall holdings making up each fund. And if we jump into that first ETF, it's going to be ticker ARKW, which is Ark's Next Generation Internet ETF. And we can see as of late, over the trailing 12 months, it is up by close to 79%. And like I mentioned right at the start of this video, most of Ark's funds have seen a major pullback. So from this ETF's high point of $187 per share, it has fallen over 31% to get back to the $128 range. So this may be a great opportunity to buy the dip on Ark's Next Gen Internet ETF if you believe the overall internet economy will continue to grow at a fast rate moving forward. And if we take a look at the fund's fact sheet, it provides exposure to AI, big data, cloud computing, cybersecurity, and blockchain technology, all sectors of the internet market that are here to stay and only expanding every single year. And currently, they kind of invest their money into different brands that enable mobile, new, and local services, such as companies that rely on the benefit of increased use of shared technology, infrastructure, and services. They also provide companies with internet-based products and services, new payment methods, big data, Internet of Things, and social distribution. So overall, this fund is definitely focused all around the internet and the themes that we've already mentioned. And they've performed extremely well since its inception. So this fund was created back in 2014, and they have an expense ratio of 0.79%, which is standard across all of Ark's ETFs. and it typically owns between 35 and 50 companies and currently has around $7 billion of assets under management. And if we take a look at the performance, it has been absolutely spectacular. Their 3-year average annual return is at 50%. Over the past 5 years, their average annual growth rate is at close to 53% per year. And since 2014, when the fund was created, they're averaging just under 40% annual growth every single year as well. So we can see and understand why Ark is considered one of the top asset managers in the market right now. Absolutely crushing the S&P 500 since back in 2014, averaging over around 40% per year is nothing less than spectacular. And if we take a look at the top 10 holdings in this ETF, we have Tesla, which we all know has absolutely exploded as of late. Then we have Grayscale Bitcoin Trust, so a little exposure into the crypto market, Shopify, Teladoc, Square, and many more. And if we just take a look at these big names, these are all the companies that have really benefited from a global pandemic. They're internet-based brands with nice revenue generation that are all part of our staples in our economy and our lives that will be here for the long term. I'm sure many of you watching have a Spotify account, read stuff on Twitter, may use the Cash App. If you go to a doctor visit during the pandemic, may have used a Teladoc service. I'm sure you've probably purchased something online from a Shopify store. Coinbase, if you're into the crypto market, and if you work out and you're into the premium electronic vehicles, you can get a Peloton. So as a whole, these are companies we all know, they're familiar brands, and they've been dominating the internet-based sector as of late. So this fund gives exposure to, of course, next generation internet. Kathy Wood and her team will pick the companies they believe are going to provide the best returns for this ETF and that are focused on disruptive innovation. So this is the first fund I believe will continue to perform very well going forward. If you believe in growth, if you believe the economy is going to reopen, post some strong numbers over the next 12 to 24 months, and the entire tech sector is going to rebound from its slight hiccup as of late, and earnings are still going to come in positively, then definitely an ETF to do some research into, speak with a qualified professional, and maybe worth a nice addition to an overall growth stock portfolio. And now if we take a look at the second fund, it's going to be ticker ARKQ, which is Ark's autonomous technology and robotics ETF. So this provides exposure to different electrical vehicles, electrical storage, robotics, automation, 3D printing, and even some space exploration under the ARKQ ticker. And if we take a look at the performance, it's up around 89% over the trailing 12 months, and this ETF has actually held up pretty strong relative to the other peers in the Ark network, falling by only around 22% from its most recent high. So some of the other funds are down 30 to 40% overall, so a decline of 22% is still definitely a nice buying opportunity, but not as bad as people were expecting. And we can see the fund currently trades right around $77. So if we take a look at the fact sheet, like we saw, it provides exposure to different autonomous vehicles and all the companies who are making technological improvements and advancements in scientific research related to energy, automation, manufacturing, materials, and transportation. So these are not just the directly EV companies or energy storage companies. These are any brands that contribute to the manufacturing of those products, services, or goods over the next few years. And Ark has done a terrific job of picking a sector projected to expand very rapidly going forward. Autonomous technology, whether it be vehicles or other services, are only going to be the future. Everyone's expecting over the next decade a lot more things we do to be autonomous, fully autonomous, and not have to be done by an actual human. So the fact that this fund's created to focus on that growing trend, I think it should perform well as more companies come out with stronger products, get more R&D done, and can perform very well. And if we take a look, like all the other ETFs, a similar expense ratio of 0.75%, typically between 30 and 50 holdings in this ETF, and it is one of the smaller ones with only 3.3 billion of assets under management. But definitely one we're taking a look at if you want exposure to a different Ark ETF with a theme style of investing. And if we take a look over the past 3 years, it's provided an annual return of 38% annually, over the past 5 years around 36%, and since inception back in 2014, it's averaged over 25% per year. So still outperforming the overall market, and if you compare this to other Ark ETFs, some of them have been performing better. But of course, when you invest now, you're investing for the future, not for the historical returns. So I want to pick the funds that, although they weren't the top performing ARK over the historical period, I think will be very strong going forward. And I definitely think ARKQ will provide some strong returns in the autonomous and robotics sector over the long term if our historical market environment that favors the young tech companies with very strong innovation continues over the next 5 to 10 years going forward. And if we take a look at the top 10 holdings, we have companies like Tesla, JD.com, which is a Chinese e-commerce brand that focuses on autonomous vehicles as well. They have a small portion of their portfolio allocated to that sector. We also have Trimble, Kratos Defense Security, Alphabet, and Baidu. So right away at the top companies are very strong brands, even on an international scale. JD and Baidu are Chinese-based companies, as well as some American brands and Lockheed Martin, and many more. So overall, another very interesting ETF, maybe worth taking a look at if you want exposure to another theme in the world that has a lot of future growth potential. So that's ticker ARKQ, the second ETF to take a look at from ARK's wide portfolio. And now if we move on and take a look at ETF number 3, it's going to be ticker ARKK, which is ARK's flagship fund. When people discuss ARK, this is what they're talking about. It's the generic Ark Innovation ETF, the most popular fund by far, the largest asset managers, and this is focused on solely disruptive innovation. So it takes into consideration all the different theme-based ETFs they own, probably picks the top companies from each, and combines them into one general disruptive innovation ETF. It's built on the cornerstone investment philosophy of overall Ark Invest and is an innovation-based theme to provide investors with exposure to the future at the current point in time. And right now it focuses on many different aspects like we've talked about, and pretty much all the different funds that Ark has created individually, they summarize it into this one ETF. So if you want to own everything and all the different themes without picking the individual ones, ARKK is the way to go. And over the trailing 12 months, it is up by 76%, and we can see has undergone a major pullback. From a high of $156, it has fallen by over 33%, back down to the $104 level. So a major pullback to definitely take a look at this ETF if you want exposure to Ark's broad-based innovation approach. And if we jump back into the fact sheet, the 0.75% expense ratio, like all the other ETFs, with a massive $22.2 billion of assets under management. $22.2 billion, that's a ton of money that's flown into this ETF as of late. And if we take a look at the performance, it's averaged over 47% per year for the past 3 years. And over the longer term, 5 years, it's averaged 46%. And since inception back in 2014, right around 34% annually, which is very impressive. So right away, from all the performance of all these top 3 ETFs, you can clearly see all the hype surrounding this company, why it's exploded as of late in popularity, and why it's get talked about on CNBC or all the different media outlets that follow the stock market. And if we take a look at their top 10 holdings, pretty much when people say Ark owns a company, they're talking about the main companies through ARKK. So right away, Tesla is by far the largest holding, making up 10% of the overall portfolio. So we all know Catherine Wood was a major bull on Tesla. She still is, and her huge bet a few years ago has paid off extremely well and has led to Ark Invest becoming this massive company. And secondly, she has Teladoc. She owns a large percentage of this company. Roku, Square, and Zoom, all internet-based brands that have performed very well over the past few years. And because they're all undergoing a major pullback as of late, we can see the big drawback in ARKK share price. Then to round out the top 10, we have Shopify, Zillow, Spotify, Twilio, and Unity Software. And these are all companies we've discussed on the channel before. Unity, a very strong, young, and new to the market software company focused on creatives. And over 75% of the top 1,000 apps downloaded back in 2020 were powered by this platform. So a very strong name in the tech sector and going to be around for a long period of time. Although they're not profitable just yet, in the software industry that has nice high margins, we're expecting big numbers going forward. Then of course we have Twilio, Spotify, the leader in the audio sector. They have over 200 million subscribers around the world and growing annually. and this company has dominated the growing sectors like podcasts. They made a recent acquisition for live audio, and overall, I don't see any other big names competing with such a strong audio-based company. Zillow, of course, provides real estate exposure. Spotify is another company I think is going to perform well over the long term. They provide the different hosting platforms for some of the largest companies' websites on the market and control around 9% of the total US e-commerce sales back in 2020. Then we all know Zoom. The popularity of this platform grew because of the pandemic, and now that offices are reopening, we have seen the share price get hammered. But their earnings numbers are still coming in very strong, and as it continues to fall, it's only becoming a more and more attractive investment because no matter what, Zoom is still going to be part of our lives. Even if we get past this pandemic, Zoom's here to stay. The platform is going to continue to be used on a monthly subscription model and still generate revenue for many years to come. Then, of course, Square, one of the fintech leaders, they're the owner of the Cash App, and overall the entire platform has done extremely well. Roku, the video streaming company, Teladoc, one of the leaders in the video and health sector kind of conference. And one thing people are worried about this company is now that the pandemic is kind of over, we're getting through it, they believe doctors' offices are probably going to reopen and the use of Teladoc Health will go down. But I personally disagree. I think, of course, we will see a pullback up front, but over the longer term, the time saving of not having to drive to a doctor's office, wait, finally see the doctor, and then go home is going to save so much time for both the doctor and the patient that doing things that can be done over video will still get done over video even after the pandemic is over. And then, of course, in number one, we have Tesla. It makes up 10% of the ETF, a very significant position in by far one of Ark's largest holdings and one of their most bullish companies in their overall portfolio. The leader in the EV space right now, but over the long term, they want to be one of the top battery producers and energy companies and do a lot more than just electric vehicles. So I think Ark's top 10 holdings are extremely innovative. They are all focused on disruptive innovation, and in some way, they've all impacted a consumer's daily life. So those were the 3 Ark ETFs that I believe will perform very well going forward. They provide nice exposure to different autonomous vehicles, internet-based companies, and overall, the generic disruptive innovation fund with over $22 billion of assets under management. So although all of our funds have stumbled as of late and we have seen a major pullback, if you believe in tech long-term, if you believe in growth and innovation, and you want to get in early on when the price has fallen 25 or 30%, definitely take a look at Ark ETFs over this next week and see if the company can perform well. And if we get a rebound, these shares might start to shoot up faster than ever. So thank you for watching to the end. Now we're going to wrap the video. I appreciate your support, and I will see you in tomorrow's episode.